Hello and welcome to PQ Prime. I'm Hiral Dadia. Markets are trading under pressure in today's session, but a lot of movers and shakers that are in focus. To discuss the same, joining us on the show is Ashish Kapur, CEO at investshop.com. Welcome to the show, Ashish, and a very good morning.
Good morning.
Ashish, let's start off with one of the biggies, Maruti. Clearly, in terms of the numbers, the profits have doubled. In fact, brokerages have gone ahead and increased the target price on the counter as well. And clearly, we are seeing a shift that's coming in with regards to where people are moving from passenger vehicles to the UV segment. And with the kind of launches that the company is coming up, do you think Maruti could be one of the beneficiaries of the wave from here on? And secondly, what would your view be on the counter and the performance?
Well, I think view on Maruti has to be positive because there is one sector which is doing very well is the automobile sector. And Maruti, with whatever any competition might do or might not do, has a very, very strong, unbeatable kind of a track record when it comes to passenger vehicles in India. Clear market leader. Yes, it has somewhat lost the race in electric vehicles so far, and in some ways, the shift towards the SUV is kind of a bit negative because they did not have too many options in that space, which they're correcting it now. But Maruti, as results show, the clear winner all the way. Every parameter is improving, and I think going ahead, I think Maruti, the auto sector itself is due for a re-rating, and in fact has underperformed the market over the last several quarters. So I think Maruti could be a very safe stock to buy. It doesn't have too much of over ownership or too much of hype
Mhm.
around it. Valuation is very comfortable, and the results have been good on various counts, on sales, on profit margins. Everything looks pretty good, and I think going ahead they would be launching several new models in the SUV space, as well as they're getting into the electric vehicle space. So all that bodes very well. So I think Maruti very safe and a very conservative pick at this level.
Right. And would you advise an investor to enter at current levels as well? Or do you think we should still wait?
See, a lot depends on the market also. If the market sentiment really turns negative, yes, Maruti being a frontline stock could get hit to some extent. But I would say that the downside is limited because the stock is fair bit corrected already from its peak of around 94, 9500.
Hmm.
So I think the downside is limited. Of course, the upside also depends on the market momentum. But overall, I would think that it should from here. My guess is the next 2, 3 years it should be doing better than the overall market. So it's definitely a good time to start accumulating Maruti from the current levels.
Right. Moving on from the auto space, I mean, staying with the auto space, you have a TVS Motors. Now, they've reported a very stable set of numbers, and the stock is up in trade in pretty much a weak setup today. A lot of strong commentary coming in from the management with regards to domestic demand that could be improving further in the fourth quarter on the back of the rural market sentiment, strong rabi crop sowing, higher MSPs that could be coming in, and overall, they've clearly come out and said that they're launching a lot of new products in the EV space as well. And they're targeting almost around 50,000 to 60,000 EV sales in the fourth quarter of FY23, which is almost 2 times the volume that they actually clocked in the third quarter. What would you make of a TVS Motor taking into consideration the lay of land in the other two-wheeler segment?
Yes, I was coming to that. I think when it comes to automobile, manufacturers, I think the top pick should be TVS Motors because the company is doing very well. In fact, in its segment, in fact, doing better than both, Hero MotoCorp and Bajaj because Hero MotoCorp definite disadvantage as it's not in the scooter segment, and Bajaj has a fair bit coming from the export market when it comes
Mm.
to the domestic market revival, which is definitely on the cards because the rural demand has been somewhat weak looking back, but I think going forward it is due to improve and there are signs of that. So the company which is all set to kind of reap benefits of this revival in rural and semi-urban demand would be TVS Motors. So I think, in my opinion, a clear winner from here. I think at the current price, and somewhat it has corrected in the last few weeks. So it's presenting a very good opportunity. I think the best opportunity in the auto space is TVS Motors at the present juncture. Very limited downside risk. Company is doing very well, very well suited at this juncture to increase its market share,
Mm.
to take benefit from the impending boom which is going to come in the two-wheeler space after a long time. So TVS Motor certainly should be added, and should be bought by investors at this stage.
Right. Moving on, Pidilite Industries is an interesting counter to watch out for on the back of earnings. A surprise fall that we've seen in the third quarter. Now, clearly, we've seen input costs that have gone up. Demand seems to be weak as well. What are you making of this entire scenario? Because overall, if you see, this is kind of the lowest number that we've seen, obviously, I think in the last 8 to 9 quarters, right? It's the slowest growth, I would say, in the revenue front. Now, is it that a lot of new entrants that are coming into the segment that's eating away into the market share of the biggie? Or how are you reading the lay of land, and what would your advice be?
Well, I think every company, no matter how well managed it may be, does go through a period of rough weather. And unfortunately, I think Pidilite seems to be entering some kind of a rough weather in
Mm,
the near term. I mean, the results were disappointing. Yes, the revenue was down and the margins were also hit. This happened very rarely for Pidilite. Uh,
mm,
I am very confident that, given the pedigree of Pidilite, and given the kind of management it has, I think they will come out of this rough patch very strong. I don't agree that the smaller players can eat into their market share with any significant way. I think
mm,
Pidilite continues to be the clear market leader and a very dominant player in this segment. So matter of time, if you are a very short-term investor, or you're looking for maybe a 6 months, 1 year kind of a horizon,
mm,
then stay away, and in fact use any kind of pullback to exit, because pressure could remain for some time. And not to forget that it is an overowned stock, very well tracked, very well recommended. So there would be, I think, pressure on the way up, keeping in mind the results which have come. For a long-term investor, yes, these falls are great buying opportunities. But if you are a 3 to 5 year kind of an investor, then yes, look at nibbling and start nibbling at this price itself, and use any further downtrend which might happen because of selling pressure to nibble into this counter. Like I said, I think I am very confident that over a period of time, this will continue to be a capital
mm,
creator. So this bad patch is a great buying opportunity for long-term investor.
mm.
But in the near term, it would remain under pressure. It would can even fall down more.
Right. Another stock, Ashish, that reported earnings is Nazara. Now, clearly, it's a mixed performance if you see in terms of the top line as well as in terms of the bottom line. But one thing is for sure that they've seen growth across segments, right? Do you think this would be a time to invest in a Nazara Technologies? What would your view be?
Well, I think you really have to see what your temperament is. Yes, the
Hmm.
company has done well, and it's a bit positive now, which is very encouraging. But point is, I mean, you really have to see what is your temperament. I mean, it's not a stock for a very conservative investor, for for an investor who doesn't track his portfolio very regularly, or who's not prepared to take a major hit or a major risk on his
Hmm.
portfolio. It is meant for somebody who's not conservative, who's a risk taker, because the stock could go either way. I mean, the way things are projected, this could be a multi-bagger also from here, but could disappoint in a big way also. So it's still at the crossroads. All these new technology stocks, including Nazara and
Hmm.
online, they present a high risk, because there can be technology which can challenge the stock, the company, if you're going forward. There can be various other parameters on which it can be challenged. It's not an established traditional brick and mortar business. So that one has to keep in mind. But having said that, yes, the results are very encouraging. They have grown across various segments. They have introduced many new games on online. Yeah, so gaming is certainly
Hmm.
picking up also. So it looks very good and very encouraging. Like I said, is the company is turning around at the operating level at least. That way, yes, the chances if you are looking at buying a new technology stock, this could be one of the ideas, but only for investors who are prepared to take a risk and for a higher return. Yes.
Right. So that's with Nazara. Moving on from the consumption space, you still have a United Spirits. Now, if you see United Spirits, the stock is down almost around 10 to 11% in the last 1 month. Yes, there have been pressures that have coming in overall with regards to input costs. However, the management has also come out and said that in the shorter term, they do expect inflationary headwinds to continue. So, what would you do with the United Spirits? Would you advise an investor to actually stay put, or is it the time to invest at current levels?
I think it's a time to invest at current levels again with the rider that you should have no time constraint because the headwinds could go on for a little more longer than expected. But generally speaking, I think alcohol or any other sin industry does very well, and India is no exception. Alcohol consumption is on the rise.
Hmm.
United Spirits is a very clear market leader. It has very kind of unbeatable market share in this industry with huge number of brands already there and a huge with the parent company already also has a huge the collection of brands which they can introduce at some stage in India. So that way, a very good, very well backed company, very good pedigree, very good market share, very robust distribution network in an industry which is set to grow over a period of time.
Hmm.
So therefore, there can be nothing really going wrong with it. Yes, these headwinds keep coming on the way, which they have experienced right now also, which is not unique to United Spirits. I think it has been somewhat felt across various consumer segments. So for the short term, one can't say maybe the headwinds continue, could fall a little more, but I think major part of the damage is done. If you're an long-term investor, this
Hmm.
could be a very ideal entry opportunity.
Right. And the last stock that we want to discuss, Ashish, is the Granules India. Now, clearly, the paracetamol maker has posted a 23% increase in the third quarter profits, and there has been strong demand as well. Simultaneously, overall, if you see in terms of the European markets, is where they're looking to grow in terms of geographical expansion. And clearly, the management is indicating that Europe is likely to yield a higher probably turnover and EBITDA in the future period. Stock is under pressure in today's session as well. A 5 to 6% fall is what we're seeing. Firstly, why is the company reacting negatively to the numbers? And secondly, what's your view on the counter?
Well, I think pharma as a whole, I think sector is kind of going through a rough patch, is getting corrected in the market. Uh, I don't see anything wrong with Granules India. The company is fundamentally pretty good, has a very
Hmm.
strong line of APIs which they are planning to introduce in the coming future. They're be doing very well in the API business as it is. So I don't see anything wrong. I think
Hmm.
the it's also linked with the overall sentiment in the market, especially towards the pharma sector. So again, like I said, I think stocks do face rough weather because of their own reasons and because of industry reasons. I think in this case, it's more of the industry reason rather
Hmm.
than the individual stock or individual company performance giving any worry.
Hmm.
Could go either way in the very near term, but again, a stock which has delivered in the past, and I don't see why it should not deliver in the future. So I would stick my neck out and say that again this could be a very good time to for long term investors to buy into this stock at the present juncture.
Right. So that's with regards to Granules India. Thank you, Ashish, so much for joining us on the show and sharing your views overall. And thank
My
you, viewers, for joining in as well. Thank you. Stay safe.